But let's now turn to fundamentals. Sridhar Sivaram, Investment Director at Enam Holdings, right here in the studio. Sridhar, hi, good morning. Great to have you on the show. I know it's 17th, but is it too late to wish Happy New Year?
Happy New Year to you and to everybody here and to the viewers.
Not as all that happy for Indian markets though, right? I mean, I don't know whether it's coming at the back of underperformance vis-a-vis China because suddenly they've lifted all their curbs and a lot of money is moving into that market.
Yeah, so I think last year India had a very good year in terms of outperformance from the emerging market standpoint, and the big underperformers were North Asia, China, Korea, Taiwan. Those three combined is almost 60% of the emerging market benchmark. So we are seeing a comeback for them. I mean, China in the last 3 months is up 50%. That's a 30% benchmark weight for MSCI, and that's up 50%. That's a massive move for a market. So I think given the volatility in emerging markets right now, markets like India who do very well when the markets are down, or if it's a steady move. When you see sharp moves, money tends to move out of markets like India. So that's what we are seeing right now.
But is that a knee-jerk trade, Sridhar? You know, that's the question. Or are you going to see a long-drawn patch of India underperformance relative to other emerging
No,
markets?
I don't see a long-drawn patch. I think it's more tactical right now because large markets are moving very fast, and India was a consensus overweight. In fact, it wasn't a consensus overweight till about third quarter of last year. Because we were seeing continuous FI outflows, and then we started seeing. So I think the FIs are chasing the market right now. So I'm happy that I'm not an emerging market fund manager right now because these are very tough markets to manage right now. But I think overall, I would say over a period India will outperform. But short term, underperformances are possible. Plus, India is on a valuation basis is more expensive than what it is normally.
Still, it is.
Yeah. I mean, it's always traded at a premium, but currently that premium is maybe one standard deviation higher than normal. So that's where I think we are. So these are times when India may underperform.
So we should brace ourselves for another 5-10% downside from here. I don't know.
Even it could be a time correction for all you know.
Yeah.
I don't know what comes in the budget because there's a lot of rumors about changes in capital gains and stuff like that. You guys have covered it. All the media houses have covered it. We don't know what exactly comes. So I think the market's a bit nervous also on what happens on 1st February. So if nothing happens, the markets will rally. And if nothing major happens, a little bit of tinkering around, I think it's priced in. So we'll have to wait and see how the markets take. But I think post that, earnings would have been also over. We're seeing some softness in earnings. So let's be fair that we're seeing a K-shaped recovery. And anybody who's in the middle to bottom half is seeing some sort of challenges in terms of growth. And we are priced to perfection as far as growth is concerned. So our own view is that value will continue to outperform growth, at least for the next 6 months. And then once growth comes back, then that's maybe the time to relook at the very high price growth stocks.
So value will continue to do better than growth. Does that mean you're still cautious on IT, not convinced by the earnings that we have seen so far?
No, I think IT, the challenge will come for next year, which is we'll know how the year is going to pan out once Infosys comes and gives a guidance. If they come and give a single digit guidance, then I think they may have some more challenges. We will know more because typically when US or Europe enters into a recession, discretionary spending gets cut first and IT budgets form part of that. So any change in the IT budget would have an impact on the earnings and the revenue growth for Indian IT companies. So we've already seen some correction. So maybe a lot of it is already priced in, but we would want to wait for some more time. So we are underweight. It's not like we are zero, but we are underweight that sector.
But still there you're more positive on the large caps because while I do take your point that discretionary spend is the first to go, but if you look at the commentary coming in from the global banks after their earnings, Citi, JP Morgan, Wells Fargo, they're all talking about how technology remains one of the focus areas and the fact that they're not cutting the spends for now. I don't know what pans out 3 months from here, but do you think the correction is a bit overdone? And if you have a 2 to 3 year time horizon, it makes a good positional trade?
Yeah, maybe from a 2 to 3 year standpoint. But as you mentioned that they are not cutting the IT spend, the question is, are they growing the IT spend? So we are paying for growth, and we are paying for growth which is not single digit. We are paying for growth which is at least mid-teens. So I think it's a question of expectation versus reality. And once that settles in, then I guess these stocks will be right, which is why I said that value versus growth right now, because a lot of the growth stocks, actually IT is not really that highly priced, so they are somewhere in between. But it's a cyclical industry, so we have to first accept that they will have cycles where growth will be slow and they'll have cycles when growth is higher.
So does the comfort at this point in time lie in the financial sector, because it really seems to be the expectation that this year is going to be very strong for banks across the board?
Yeah, so we are very bullish on financials. I know it's a consensus trade now, but we are bullish both on the private sector and on the PSU side. We think that as one of the large bankers said, this is a Cinderella moment. It's actually turning out to be one, and maybe this is early time of the party. It's not 12
I was
o'clock.
just going to say, is it closer to 12? But yeah.
Yeah, so I think the big thing for our financials is that the credit cost seems to be falling very drastically, and the new NPA accretion is far lesser than what even these banks are, projecting for themselves. So for the moment, this looks, like a very all the stars seem to be aligned right now.
But tell me, within that also, would you want to perhaps change allocations? Because, the problem of the high PE stocks is, and the, overall consensus is now posing to be a bit of a challenge for an ICICI Bank and a Bajaj Finance. We saw that after Bajaj Finance's Q4 updates.
Yeah.
HDFC Bank has been a no-go because it continues to have that overhang of, merger.
Yeah.
So do you now change the composition and the allocation within banks and financials?
So within banks and financials, we are overweight banks. So we prefer banks over NBFCs.
Okay.
So that's the first starting point. And within banks, we were amongst the early ones to get into this whole PSU bank trade back in early 2021. And that time it was more like a trade. But as things are playing out, it's become more than a trade because they're consistently delivering very good results. We saw one of the smaller PSU bank declare results yesterday. They had 1.3% ROA, 25% ROE, almost 97% coverage. They are actually challenging private sector numbers now. Sure. Not all of them, but you can pick and choose from the entire basket. And having said that, on the private sector banks, I think the growth will continue. In some cases, as you mentioned, there's challenge of merger and stuff like that. But we will look through that if given that we are long-term investors. But we think that banks are better positioned right now because the regulatory arbitrage for the NBFC versus the bank is significantly getting reduced. In fact, there's more regulation now for NBFCs than before. As a result, I think eventually large NBFCs will have to convert themselves into a bank, if not today, tomorrow. So we are better off with, that's our view, we could be wrong, but we prefer banks over NBFCs in the financials basket.
Sure. Sridhar, market has been romancing capex as a theme right now, right? And that's where you kind of spot value because most of these stocks are still very cheap and not everyone sort of caught on to the train or bus, whichever one you want to pick here. Where do you stand on this capex theme and what is the best way to play it?
So actually, the capex story has been a bit of a start-stop. I mean, a lot of capex was announced. When we speak to some of the larger companies, they're still saying that the actual order placement is still a bit slow. Maybe because of what happened last year with all the geopolitical issues, some bit of slowdown in the developed markets. We've seen some bit of pullback. So I think it's become very stock specific where companies have a lot of orders or the visibility is good. Those seems to be a better option. We're quite bullish on the defense side. So there at least, from the government side, we know a lot of defense orders are placed. Plus there are offset related companies where India is becoming offset partners to some of the global defense companies. Those seems like some very interesting option on the capex side. So these are capex heavy industry and those seems like very interesting option. As I said, becoming a very stock specific bottom up rather than what we saw in 03 to 07 where you could just play all capex related companies and all of them double tripled because the order flow was so huge. We are seeing very stock specific right now.
And defensives is a place that as of now you wouldn't be looking at closely? Apart from IT, the pharmaceuticals?
Which one you said?
Pharma?
Pharma. So pharma again is becoming a very stock specific, which is a lot of these companies have there are issues in terms of the pipeline, and some of the companies are having issues with US FDA in terms of inspection. But we are quite bullish on some of the pharma companies in the CRAM space. So we think there's opportunity there.
So, Sridhar, when you say you are more positive on value versus growth, we have talked about the public sector banks, which was one undervalued space per se. Which are the other spaces where you're seeing deep value? Are you looking at the likes of power sector, infrastructure stocks where you're seeing value, or which is the other pocket then?
Yeah, so the power sector is the other option. Some of the commodities, especially non-ferrous, where some of the stocks have corrected fairly sharply right now after the rise we saw post-COVID. So a lot of it is very stock specific after that. But the idea is not to pay for growth at any cost. So be cautious on what you're paying for, and to be reasonably sure about the earnings prospects of the company, because as we've seen with this results also, that any disappointment is being treated very harshly by the market. So you're better off having some margin of safety.
Is two-wheeler also a pocket of value? Do you think that is where we can see upside, because it's done nothing with respect to what has happened to passenger vehicles and commercial vehicles?
So we are actually avoiding the two-wheeler space because there's a lot of disruption that's happening. The EVs are not, the traditional EV scooters are not disrupting right now so much. But if you see around what is happening, say even in BKC or any of the others, you're seeing these small scooty type two-wheelers which are floating around. They don't need
Those
any
blue ones.
Yeah,
I've seen those,
you don't
yeah.
need any registration for that. So it's under 25 kilometers, so you don't need any registration. You can drive. It is a variable cost, so all the delivery boys are using that. So what is happening is, in some form or the other, the large amount, if you see even in Bangalore and Delhi, this is becoming very popular for delivery, more than actual people using it. That actually in some form or the other is disrupting. If they were not using this, they would have used some other two-wheeler. And because it's a variable cost for them, they pay per hour, it becomes a very good option for people in that business. So we think there are a lot of disruptions happening, but given that this is possibly the big reason why the lower end two-wheelers are struggling. So if you see the numbers, you'll see that the 100 and 125 cc bikes are really struggling, and I think this is possibly the reason, because there are other ways of moving around. So we would rather be cautious on sectors where we are seeing visible signs of disruption.
Yeah, absolutely. On the point that you were making about the budget, just wanted to understand how big an event could it really turn out to be, because I'm not quite sure whether LTCG, any tampering would happen there, because the tax collections are absolutely robust. It's in any case taxable income which you put into the market.
Yeah.
So that whole assumption of taxing and further increasing LTCG kind of doesn't fit the bill right now.
Yeah.
But would it really be a market moving event?
So if I connect the dots and listening to what Mr. Bajaj had to say, and some of the other comments that we have seen, this is what I think may happen, that is basically talking of rationalizing the tenure for long term. So today, if you see, the long term capital gains for equity is 1 year, for real estate and REITs is 2 years, and for debt is 3 years. So you're really talking of rationalizing this. It's highly possible that everything moves to 3 years. Okay, so that's number one. The second is that the difference between a long term and short term is only 5%. So you're talking of 10% for long term and 15% for short term. That seems too less. It's highly possible that 15 goes up, maybe to 20, worst case to marginal tax, but we'll know in the budget. The other thing is that the government is looking at rationalizing all savings products which are tax free today. So they've already sort of plugged the loophole with capital gains, with say insurance in Europe. There are other insurance products which are tax free. So what we hear is that is the other possible tinkering around which the government could do. We don't know how this plays out and what all come. If the worst case comes in everything, then that's bad. Which is why I said that some bit is already priced in, and some bit is not. So we will get to know more on the budget day as to exactly
So
what
it's
the
not such a non-event
exactly
as it has
that's what
been
I'm
in the
saying.
previous
That's what I'm
years.
saying,
Yeah.
and all these are there in the public domain.
Yeah.
So you see a lot of this. It's already been written and discussed. In fact, Mr. Bajaj went on to say that I had already discussed this at the previous budget, and I'm surprised that the market did not discuss this more.
Yeah.
I mean, those were telling signals that something is cooking there. We
Yeah.
don't know exactly what.
What? Okay, we will find out on Feb 1st,
Yes,
but
very
great to
much.
have you in the show as
Thank you.
always,
Thanks for
Sridhar.
inviting me.
Okay, let's just revisit what the market